Good evening, good evening, good evening, everybody. Good evening, everybody. Good evening, everybody. What's going on? Shout out to everybody in the mood for pulling up and dealing with the antics on this Friday. Michelle Tucker. What's going on, Michelle? What's up, here to learn and share? First in the building, as always. What's up, Davario? Buenas tardes. Buenos tardes. What's up, Deborah? What's up, my sweetie in the building? Hey, baby. What's up, KC? What's up, Sonia? What's going on, Sonia? And the rest of the crew. Hey, man. What we gonna talk about? I gotta remember what I was talking about. Hold on. Pull up my. That's it. That's what I want to talk about. Let me share my screen. I had to pull up my thumbnail so I could remember what I want to talk about. Respect from Portugal. Johnny Disney JD Stretch Tense says he's from Portugal. I can only take your word for it and say, welcome. Since I don't know anyone in Portugal, Johnny Disney, why do you stretch tense? Why? And if you're from Portugal, do you understand the words are coming out of my mouth? Welcome. He says, been a while since we had entertainment. It's been so long since I had entertainment. Woo! And I'm still waiting for Tim to come back and sing to me. Now, will you forgive me? What's up? What's going on, Marcia? Marcia. You remind me of a West Side Story. Y'all done messed up when y'all let me put my mic on the stand. Hey, man, we talking. Shout out, not my boo. Y'all know my boo over there. That's my boo right there. Shout out my dog. Y'all shout out my dog. Y'all ain't realize my dog was in the studio. Shout out my dog. He go by the name of Robertson. Shout out Robinson that made it in the studio. I forgot I put him in here, and the other day I was on here. I said, hey, what's that? That's me and Robinson. Me and you, your mama and your cousin too. This is what we talk about today, man. Draw your attention over there to that side of the screen, right? I glitched. Draw your attention over there to that side of the screen in case I glitched out. Are the market makers out to get you? Or is it you? You know what I say? I say it is you. No one is out to get you in the markets. Let me back that up. It is you, because you don't realize that everybody's out to get you in the markets. So, are the market makers out to get you? No, they're not out to get you. They're out to get everybody. The market maker, aka the algorithm, job is to make everybody. What's the market maker job? They're trying to make everybody wet. Let's see what the chat has to say. Right? Let's see what the chat has to say. The market maker, aka the algorithm, is out to make everybody wet. Y'all put it in the chat. Y'all go ahead. Put it in the chat while I sip a little bit of water, and I'm gonna see what the chat has to say about this. The market maker, aka the algorithm, is out to make everybody. Y'all ain't spell it right. Y'all supposed to say liquidity. Liquidity. If you can't see the liquidity, then you will be the liquidity. So eloquently said by Marcia. If you cannot see the liquidity, you will be the liquidity. And if you can't see the liquidity, you probably just gambling. You're relying on stuff that has nothing to do with why the market is going up or down. Right? I choose not to trade in consolidating markets. Right? Why? Because my anxiety won't allow me to do so. My feet go to tingling. I go to getting antsy because my anxiety won't allow me to. You can see the liquidity in consolidating markets. You can see the liquidity in high resistance trading environments, but it's just it just shout out my dog in the building. He just pulled up. This guy right here. Let me get my finger right. There you go, right there. I'm trying to get it. I'm trying to get it right. I want to give him a look. Coochie, coochie, coo, coochie, coochie, coo, coochie, coochie. Hey, so, all right, before we get into what I want to talk about today, right? Y'all do me a favor, right? Y'all do me a favor. Looking at what's on the naked chart right here, right? What's on the naked chart right here, right now? Would you be looking for an opportunity to buy or sell? Just looking at what's on the chart right now, right? Would you be looking for an opportunity to buy or sell? I'm just trying to gauge the room. I'm trying to gauge the room to see who I'm talking to, right? If you just looking at what's going on with the chart right now, right? Would you be looking for opportunity to buy or sell? And then I'll tell you what I would be trying to do. Marcia says, I would be looking for opportunity to buy. The Black Al Davis says, I'll be looking for opportunity to sell. Who else? Sell, like the CEOs and insiders have been doing. What else? We got one buy, we got two sales. I see 23 people. Two buys, three sales. Two buys, three sales. What else? What else? Two buys, three sales. Nobody else. 5 people out of 24. We gotta wait. I said buy or sell. What are you trying to do? You'll be looking for a reason to buy or sell. You will be looking for a reason to buy or sell. We got to sell. So we got 4 sales and 2 buys, 4 sales and 3 buys. We got eraser liquor. Okay. There's no wrong answers here. Right? But me, in my humble opinion, based off what's on the chart right now, these are hourly candles. What's on the chart right now, I will be looking for a reason to sell. I'll be looking for a reason to sell. Why would I be looking for a reason to sell? I'll be looking for a reason to sell because, right, we're not even going to go to the lowest we can on this spectrum right here, right? On this spectrum right here. Now, let me preface this. Everything about trading depends on your time horizon, right? So since we are looking at hourly candles right now, right? We're going off the premise that we are looking for intraday trades because we are on an intraday time frame. So since we're on an intraday time frame, right? And we're not even going to go all the way to the lowest of the low. We're going to come to this low right here after the market really starts to move, right? This is the highest high. Yes, that high is a little higher, right? So looking at that, we are in a premium. Price is in a premium right now, right? So at this very moment, just looking at the price, not having any kind of bias, not, you know what I'm saying? Because y'all already know how I am. Time, price, bias, draw. Draw being the most important, right? Time, price, bias, draw, and draw being the most important. So without even doing any kind of research, just glancing at the chart, looking at the time frame, I just automatically say, hey, are we in a discount or a premium? And looking at what's on the chart here, we are clearly in some type of premium, right? Right? Again, like Michelle said, we are in a premium, so we should look to sell. Now, since we are in a premium and whatever you decided to buy or sell, right? Whatever you decided to buy or sell, because we all agreed, right, in the beginning, that it's all about the liquidity, right? It's all about the liquidity, right? What would be your first exit when it comes to if you said you're going to buy or sell, right? If you're going to buy, what is your exit, right? I'm going to put some lines here, right? I'm going to make it green for buying and going up, right? I don't have anything else to put, right? And I'll make it red for going down. What would be your first target? Looking for the high to be taken, then buy. Okay, so you're looking for a continuation. So you're looking for a continuation up, right? So your bias is, you're going to the upside. So you're looking for a break of this high, and then look for a reason to buy. Got you. Then wait a minute. You can't flip flop now. You can't flip flop. Let me go back. What did she say? You said buy. So you can't flip to a turtle soup sale. Stay on your side of the fence. Hey. What's up, FC? Hey. Ain't nobody putting what they target is. You hollering sale, but you ain't telling me where you going to. Let me put some big numbers on there so y'all can see it. Y'all probably be like, I can't see the numbers, Tim. 45, 34, 50. I'll be like, I can't see the numbers, Tim. 45, 17, 75. 45, 50, 150. If you said you was buying or selling, right? What's your target? We all agree it's about liquidity, right? 45, 34. Benson said he's selling. You selling at 45.34, or you target. So you selling, you coming down once this right here break. So Benson, once this right here break, you're looking for a reason to sell there. So you selling on the breakout. Okay, Benson selling on the breakout. Benson selling on the breakout. Buy to take, buy side liquidity. So Erica looking for a reason to buy and take it up to 51.50. Equal for me. What's equal for you? What Benson said? First target. Okay, Doc getting short somewhere, and his first target 34.50. Right? He closing out at 34.50. Selling, target at 34. Okay. Yes, selling. Okay, so once we break here, you selling there. Okay. Breakout. So Benson is a breakout. Doc, KC, Deborah, you said equal for me. You talk about equal. What Benson saying? Once we break this low, you looking to go short? Michelle. Okay. So, all right. Now, let me do something. Let me do something. Take profit after selling above. So you selling up here somewhere, you taking profit at 34. So you're not breaking out. You're getting short up here somewhere after opportunity presents itself and coming down here. Now, okay, for those who said they're buying or selling, right? Those who said they're buying or selling, right? It's all about liquidity. What liquidity needs to be taken before you look for an entry? Benson already said it. Benson said he's looking for 45.34 to be taken before he looks for a short entry. Everybody else except for Benson, right? What liquidity are you waiting to be taken before you look for your short or your buy? Right? I know y'all saying, Tim, I ain't tap in to do no homework. Well, you shouldn't have tapped in. What liquidity? It's all about liquidity. What liquidity are you looking to be taken before going short or long? Benson said, once we take the sell side, 43, 45, 34, 50, and it don't hold, once we break through this and hold below it, he's looking for opportunity to sell. Marcia said, once we sweep, hey, stop trying to switch. You done jumped the fence. Now we got a fence jumper. We got a fence jumper. The fence jumper says, once we take out the buy side at 40, 45, 51, 50, she's looking for a turtle soup to go short. So fence jumper, if you took the turtle soup short, what's your target? Because you never gave me a target before. KC said, once we take out 41, once we take out the buy side, Michelle said, take out the buy side, then break market structure down with first target at 43. Okay, Marcia, go to timeout. Hey, it's 27 people on here, and I'm seeing the same people comment over and over. I'm assuming you lurking, and I'm assuming you lurking. Who are you? Who are you? Who are you? I'm seeing the same people. Are you lurking? Are you lurking? Are you lurking? Are you a lurker? Hey, baby, bring me my hater blockers. Baby, I need my hater blockers. Somebody lurking. It's 29 people on here, and the same. I skip. I'm sorry, He'll Learn Chef. He'll Learn Chef say she's taking out the buy side too. It's still the same names. It's still the same names. It's still the same. It's 29 people. Stop lurking. Get off my live if you're not gonna participate, you lurker. Hey, okay. So now, Tim, what's the point of all this right here? What's the point of you asking us these questions, right? Because this is trading. This is trading, right? This is trading. Trading is all about identifying where's the liquidity. Trading is all about waiting on the market to tip its hand. Trading is all about waiting for your setup. Trading is all about executing. Trading is all about sticking to the script. Trading is all about removing your emotions and letting the trade play out. Trading is all about recognizing, hey, I'm on the wrong side. Let me mitigate my loss. Trading is all about, I'm on the right side. I'm not afraid of this pullback or retracement. Trading is right here, right? Trading is mental. If you understand the draw on liquidity, you are 75% of the way there. The other 25% is broken down in between emotions and discipline. That's the other 25%. 75% of trading is understanding what is the draw on liquidity, right? If you understand the draw on liquidity as it fits inside your time horizon, you can be a successful trader if you can control your emotions and your discipline, right? You got to control that 25%. You have to control it, right? Understanding the draw is everything. Liquidity goes buy side to sell side to buy side. Once buy side gets taken, we can go short. Thank you. Been a minute, Tim. Hope you're in it. Yeah, I ain't talking about that. Thank you. Anyway, though. Thank you very much. Hey, so let's go back to the chart. That's why, and the reason why I ask these questions and I want you to talk it out is because, well, I used to tell you every day, but you see it like you think you're seeing it, right? Whatever you see on the charts, if there's liquidity there, wait for the market to tip its hand that it wants to go get it. When it shows you that it wants to go get it, wait for your setup. If your setup does not present itself, don't chase it and don't force it. Wait for it to tip its hand again. It will tip its hand over and over and over and over and over again. That's that 25%. Controlling your emotions and your discipline. The 75% is the little exercise that we just did, right? Do you want to go short or long based off what the market has done? You make your decision. No one can decide that for you. Once you decide, where is the liquidity? The liquidity is here. The liquidity is there. Liquidity always rests above highs and below lows. That's where it always is, right? That's where the liquidity pools are, right? Then you have these things called imbalances that's in between the liquidity. An imbalance is a gap, a long wick, a fair value gap. It's going to be some imbalances in between the liquidity, right? What are those imbalances? Those imbalances are going to be targets and speed bumps, right? On the way to the liquidity. So you can use the speed bumps as entries to the freeway or exits off the freeway, right? You can use them how you want to, entries or exits. You can use the liquidity as entries or exits if you are a turtle soup sell or turtle soup buy type trader. I'm not a turtle super. I don't try to guess the top. Turtle soup sales and turtle soup buys is pretty much, I believe this is the top and the bottom for this particular move, so I'm going to go in. I'm not a turtle soup sell or buyer. My anxiety can't take that. But if you can see it, you can achieve it. That's why I did the assignment in the beginning. I said, are you buying or selling based off what you see? And then I told you why I will be looking for a reason to sell. Because we're in a premium right now. I buy in a discount and I sell in a premium, right? That's why I will be looking for a reason to sell just based off what price has done right here on the screen. Not having no kind of bias, not having no kind of nothing, just what I see on the screen, right? So now let me put a little bit of makeup on the screen, right? And we're going to continue. All of this has to do with, are the market makers out to get you? Or is it you? Market maker is the algorithm, right? Let's go over here. Let's put a little lipstick on the chart. Let me look at my other screen so I can see which one I want to put on the chart first. Let's let me go to a 1 week. Go to a 1 week chart. And I'm going to turn on my information on. So that one there. Right above midnight. Okay. Right above midnight. We at 1 hour. Who's on 1 hour candles? Okay. So now, gonna leave it squanched up to that side of the screen, right? And we're gonna bring some more information in, right? We're bringing more information in now. Now that we got more information on the screen, right? Now with more context on the screen, these are hourly candles, right? This is, what's the date? The 10th. Let's go to the 10th. Come over here to the 10th. So this right here, that's 12 a.m. Monday morning. That's the start of, we'll just go back to Sunday. We'll go back to Sunday. That's the start of the week right there. That line right there, that's the start of the week, right? So this is the start of the week, right? This is a weekly volume imbalance, right? The beginning of the week, we opened up, we came down, and for the rest of the week, nothing can stop me. I'm all the way up, right? And now we're right here. This right here, this candle right there is 7 a.m. on Friday. Today, 7 a.m. this morning before the market opens. We all know how the day played out, but we're just saying we don't know how the day played out. We're just using that's why I squanched up to the side of the screen. So now, this is the beginning of the week. This is where we've come to. It's Friday morning. We have gotten up here inside this weekly volume imbalance, and we have been consolidating all night, right? We have been consolidating all night. Now, right? Looking at what we have done, we are well inside some buy-side liquidity, and we are at a weekly target, right? We are well inside some buy-side liquidity, and we are at a weekly target, right? So we're in an extreme premium and we're at a weekly target and we have been consolidating, right? If you look at the price action throughout the entire week, right? Throughout the entire week, this little piece of consolidation right here, that is doing what? Well, all of the consolidate, not just this one. We've been coming up all week long, and now this piece of sideways movement right here is engineering liquidity, right? We're engineering liquidity. And when you engineer liquidity, what are you doing? You're letting buy side and sell side build up above and below the market, right? You're letting buy side and sell side build up above and below the market price, right? Now, we are in a deep, deep premium, and we have just like obliterated buy side liquidity, right? We just like, I can't even squanch it up no more. There's nothing to squanch on this contract, right? We've obliterated buy side liquidity, and we are in a weekly target, and it's Friday. So understanding how price moves and what price does when you get to a weekly target, right? We're either looking for price to kind of chill out and consolidate or pull back a little bit. That's what we're looking for, because we're extended. We're far in a premium. We're far, even if you only came back down to this area right here, right? You're looking for it to, try to do, pull back, do something, right? But on the flip side, we still got a little room to go to the upside here. So when you can't clearly say this is what the market is going to do, that's when you sit on your hands and you wait for the market to tip its hand. You don't try to force your will on the market, because the algo, aka the market maker, is not out to get you. It's out to make you liquidity. It's not out to get you. It's nothing personal. When someone's out to get you, they have a personal vendetta with you for some reason. The algo doesn't know you. The algo just knows, make everybody liquidity so that I can survive. The algo is an animal, just like that lion that's out there looking for something to eat. Everything is food. It's nothing personal. Everything is food, right? So the algo is out here trying to make everybody liquidity. So what you do, you sit back and you wait for the algo to tip its hand on what it wants to do, right? So now, my personal preference of trading was displayed by Michelle, right? Take out liquidity, then wait for a market structure break in the opposite direction. And once I take out opposing liquidity and get a market structure break in the opposite direction, that's when I start looking for my setup. Benson, he's playing the breakout, right? He waits until the liquidity is taken and it doesn't hold, and he's looking for the continuation in that direction. He's using the breakout just like here, right? When the market broke this buy side right here and it didn't hold, it closed above that, coming back down, Benson would be buying there, or some however way he buy, right? Got the, the continuation right there. Good trade, right? I've taken continuation trades, but it's all about the draw, right? But I just love the break and then the reversal. That's my go-to. I will take a continuation if we aren't so extended like this right here. This is too extended for me to be looking for continuation. That's why I said in this situation, I would be looking for a reason to sell, because this is extremely extended. We are in an extreme premium. If price is to continue up to the top of this volume imbalance at this point, it would have to go without me, because we're in an extreme premium, and you have to control that 25% and say, I'm okay with price going without me. I would not FOMO into a trade because it doesn't meet my criteria. That's that 25%. The algo is not out to get you. You have to learn to control that 25%. Control that 25%. Okay, so now let's look at how today played out, right? Today played out as such. We took out the buy side, then we came down and we took out the sell side, right? So anybody that was in the mind frame of, I'm going to take out the buy side here and then look for a reason to buy, you would have got clippity clapped. You would have got clippity clapped today, right? Anybody that was in the mind frame of going to take out the buy side, then look for a reason to sell, you would have had opportunity to sell down and get at least this first target that we talked about, just below this 45, 34, 50, right? So now let's talk about some other stuff real quick before I get out of here, right? Not only is it important to understand the draw on liquidity, if you don't subscribe to ICT's teaching, this is the time for you to exit stage left. If you subscribe to ICT's teachings, hang out for a minute, because I want to share something with you. And you probably know this already, but I just want to share it again, right? You hear me often talk about time, price, bias, draw, right? In the sense of time, price, bias, draw, right? We're going to go to Monday. This right here is Monday. I'm just going to put it on 12 a.m. All right, that's Monday, 12 a.m. Right? Tim, what's these funky little boxes you got here? I'm explaining it to you in a minute. That's Tuesday. All right. So what we got here, if you don't know what these are, these little handy dandy little areas that I have marked out on my screen here, these are what Michael refers to as kill zones, right? What are kill zones? Kill zones are a time of day when, very good. I see somebody said kill zones, right? Very good. Kill zones are a time of day when the concepts that he teach are most likely to play out. The concepts of draw on liquidity, the concepts of algorithmic trading, the concepts of all of his PD arrays that he teach, these are the times where you are more likely to see his concepts. It's not saying you're going to see your model, but you're going to see, it's more likely to see his concepts unfold during these specific times of day, right? So What you want to do, you want whatever time of day you choose to trade. If you choose to be a London trader, if you choose to be a New York morning trader, if you choose to be a New York evening trader, you want to learn to see his concepts unfold during specific times of day. Time, price, bias, draw. The time in that four-letter mantra, if you will, is ICT kill zones. That's the time. Well, that's part of the time, because you have kill zones, you have things like um weekly and daily imbalances, weekly and daily gaps. You have macro times. It's a bunch of stuff dealing with time, but the overall umbrella of the time are the kill zones, right? And what are the kill zones? Roughly 2 a.m. to 5 a.m. You can have a little leeway in the beginning, like a little bit before it. It ain't exact science, but this is the window, right? From I say from like, I don't look at nothing from 8:30 to like 12, but from 7 up until 12. And the 7 to 12 is broke down between the New York open and the London close. The London close is a window between 10 and 12. The New York open is between 7 and 10. So it's before the market open up until 12. And then the London close, it overlaps with it from 10 into 12. Right. And then the New York PM from 1 until 3. And then you got the New York close, the last hour from 3 to 4. But I don't really trade during that time, so I don't mark it out. You can mark it out yourself. So what are you looking for during this time? You're looking for the draw on liquidity. We said that in the beginning. It's all about the liquidity. It's all about the liquidity. You're looking for the draw on liquidity. If you go into it with a bias, time, price, bias, draw. If you go into it with a bias, that's very helpful. But you don't need a bias to intraday trade. As long as you got a clear understanding of the draw on liquidity, you can intraday trade. You can trade against the grain. Trading against the grain is going against the actual bias. You can have a bullish bias, right? But you're in a premium. And so you can take a short to get back down to the discount, right? So what do you want to look for in the kill zones? You want to look for signatures, right? You want to look for signatures to play out for opportunities to enter, right? These are 15-minute candles here. If it don't play out on your timeline, you may just have to wait. You may just have to wait. Because look at this right here. Let's just look at this entire day. This entire day right here. These are 15-minute candles, right? These are 15-minute candles. So look at how Monday played out just on the 15-minute level, right? So coming into the London, right, we took out sell side liquidity right there, right? We took out sell side liquidity right there coming into the London. Sell side was taken out, right? We took off, right? We took off after taking out sell side, and toward the end of London, we consolidated, and then we finally got a break in market structure right here, right? I'm going to mark this. I don't have a break in market structure. BMS. Finally got a bullish break in market structure right there, right? From the B. right? So we got our bullish break in market structure after taking out the sell side. Right. So we came down, we took out sell side, right? This during the London, these 15-minute candles. We came back up all the way up, consolidated during the dead period, right? And then going into the New York kill zone, we finally got a break in market structure right here, right? Got a break in market structure. We came up, stopped, and then we retraced back down, right? And came into a fair value gap on the 9:15 candle just before the market opens, right? So if you don't trade before the market opens, right, based off these 15-minute candles, and if you're a fair value gap trader like myself, right, you're a fair value gap trader like myself, you still are not in a trade yet if you don't trade before the market opens, right? And why is that? Because it's all about controlling that 25%. Remember, the market maker is not out to get you. It's out to make everyone liquidity. So it's on you to understand how the game is played and see the liquidity so you won't be the liquidity, right? So based off these 15-minute candles, right? If you are a fair value gap trader that waits for the liquidity to be taken and a break in market structure in the opposite way to retrace back down to a fair value gap, right? If you don't take trades prior to the market opening, you're still not in a trade yet based off the 15-minute charts. If you are a fair value gap trader that's combined with a breaker, right? You still will not have a trade until the 12 p.m. candle. The 12 p.m. candle would be the candle that picked you up for a attack on liquidity, a retrace with a reversal with a break in market structure, market structure, speak Tim, right? And then come back down to a fair value gap and breaker right there. That didn't play out until the 12 o'clock candle inside the kill zones. You see what I'm saying? Specific times inside the kill zones, right? That's how long you had to control that 25% for your trade to play out if you trade that model, right? Michelle said, what about the 10:30-ish candle, right? This 11 o'clock candle right here, right? It never came down right there. It touched. Now, if you take it off the touch of the high of the breaker, right, you would have got picked up here if you take it off the high of the breaker. But if you take it off the body of the breaker, you wouldn't have got picked up until down here, right? Off the 15-minute time frame, right? So if you took it there, if your target was these highs, right, then you would have had to endure this pullback right here. And would you have had the intestinal fortitude to hold through that pullback and come back down into that drawdown? I ain't gonna hold you. I wouldn't have. I'm not gonna sit here and lie and pretend like, oh yeah, I would let a trade go up. We're gonna use 42.28. I would let a trade go up 11 points, then come all the way back down and go negative 3 points and not panic. If it went up 11 points, I ain't gonna hold you. I I was either I probably was at the trade already, or my stop loss was trailed up, saving at least 8 points. If it got up to 11 points, my trailing stop is already kicked in, and it's going to be 9 points, because my trailing once my target goes past 5 points, right? Once it go, my ATM says when it goes past 5 points, start trailing my stop loss 2 points behind. Once it go 5 points, start trailing my stop loss 2 points behind. So when it gets up to 5 5.75 points, no, when it gets up to 6 points, 5 is locked in. When it gets to 7, it's still at 5. If it get to 8, it's at 6. If it get to 10, it's at 7. No, it's at 8. If it 9, it's at 7. 10 is at 8. 11 is at 9. Every point it scoots it up and it keeps it 2 points behind. So if it went all the way up 11 points, then my stop loss would have been at 9. And then when it started coming back down, it would have stopped me out in profit. That's how I trade. That's just how I trade. I'm sorry. It is what it is. So I wouldn't have been able to take this right here. But back to what I was saying. If off this 15-minute time frame, right? If that is your model, I can only speak to my own model. If that is your model, right? As you see, nothing played out to fit that model until this 12 o'clock candle, because I'm going to take it off the body of the candle on the 15-minute time frame. On the 15-minute time frame. Now, how can you, and you can, and one other thing before I go through and talk about the lower time frames, right? Understanding ICT concepts, right? You can anticipate opportunities based off the draw, right? We spoke about this before. When it comes to kill zones, can anybody recognize anything about this area right here? Right? And this area right there. Right? Can anybody recognize anything about this area right here and this area right there? Right? I'm going to put the cheat code back on one more time. Now, can somebody tell me what they notice about this area here and this area there? One more time with a cheat code. Right? I'll put it up one more time and I'm going to drink some water. Check it out. Tell me what you notice about that area. What do you notice about that area? Turn cheat code back off. Hello? Is anyone there? London high, London low. Not sure what you're noticing, man. No problem. You probably wasn't on the live with us, and you probably didn't see it when Michael spoke about it, because it's in those long, boring videos. And those long, boring videos is where all the meat and potatoes live. London open is opposite of London close. Very good. It's highly probable, not guaranteed, but highly probable that whatever the London does, the London close will set the opposite. It's very probable. not guaranteed, but it is very probable that during the London open kill zone, whatever it does, it's very probable that the London close will do the opposite, right? And looky who stole the cookie, right? So with that being said, right? With that being said, even if, right, you didn't pay attention or you wasn't waiting for anything based off what the London did, like we did for the entire day, we was looking, hey, we took out sell side, we're waiting for it to break market structure here, then come back down and pick us up. If you only started at New York, right, but you paying attention to what London is doing, right, this can be your opportunity to be a breakout artist like Benson, right, going into the New York, right? Because look here, we're going to come over here, we're going to find 930, right? 930 right there. That's 930. Right. So at the New York Open, right there, right? You notice when we came into the New York kill zone, we took out buy side liquidity. The buy side, we closed above the buy side. So the algorithm is saying, I want to go that way now. Right? What was left in the wake of that buy side? A 15-minute fair value gap resting right here on top of a 15-minute breaker, right? So now you can say, hey, we have a break in market structure where we closed above it and price is now retracing. We got consolidation, we got expansion, and now we're retracing, right? And that feeds into what? Right? Let's go here and I'm gonna give y'all a little something here, right? You know what I'm saying? Shout out those who know. Consolidation, when you consolidate, price is going to expand and then retrace and then deliver price. It's either going to consolidate, expand, retrace, deliver, or it's going to consolidate, expand, reverse, retrace, deliver. Retrace, deliver. Consolidate, expand, retrace, deliver. Consolidate, expand, reverse, retrace, deliver. That's all price gonna do. Consolidate, expand, retrace, deliver. Consolidate, expand, retrace, deliver. What is it delivering to? The opposite end of the London. Is it guaranteed? No, but it's highly probable. So when it's highly probable that it's going to form that opposite range and your draw is bullish and the algorithm is showing you, I want to go that way. How did it show you that? It consolidated and it expanded without rejecting. It consolidated, it expanded without rejecting, it retraced. You pulled the trigger at this fair value gap and then it delivered. Consolidated, expand, retrace, then deliver. All right. Let's come over here to the end. Let's come over here to the end. Because y'all think fat meat ain't greasy. Consolidate, expand, reverse, retrace, deliver. Consolidate, expand, reverse, retrace, deliver. I will not lie to you. I will not lie to you. I sit in front of these candles a lot, and I have learned to talk like a puppet. Why do when Muppets or whatever you call them, why when they talk, their head go back? I will not lie to you at all. It's because the person that talking with their head like this, so I will not lie. You need to learn how to bring your thumb down, talk like this, so his head won't go back. I will not lie. Consolidate, expand, reverse, retrace, deliver. That's my favorite model. Consolidate, expand, reverse, retrace, deliver. Consolidate, expand, reverse, retrace, deliver. That's my favorite model, right? If you're looking for consolidation, I mean like a continuation, like we did over here, right? Consolidate, expand, retrace, deliver. Consolidate, expand, retrace, deliver. That's all it's going to do, baby. That's all it's going to do. If you stuck around to the end, that's when you got the gym inside a gym inside a gym. And that ain't come from Tim. That came from Michael. So if you don't believe in ICT concepts, you ain't got to believe in it. I ain't trying to force nothing on you. I treat it like the gospel. I spread it to everybody I can for free. And it's on you to take it or leave it. That's why God gave us free will. I can't force nothing on you. All I can say is I learned something that changed my life, and I share it with everybody I come across for the free 99. That's all I have. I yield my time. If you have a question, type it in the chat. If you want to ask, I can put a link in the chat. You want to put the link in the chat? Here. There's the link right there. Oh, I see it. I put the link in the chat anyway. How did you know that the 11:30 candle on Monday was not a break in market structure? How do I know that it was not a break? The 11:30 candle. Which one is 11:30 candle? On Monday. So Monday, the 11:30 candle. What are you looking at it on TradingView? Are you looking at it on TradingView? Or are you a different time zone? You're in a different time zone, or if you, because this is 11:30 for me. This is 11:30 for me right here. This is 12 o'clock. This is 12 o'clock. This is 11:45. This is 11:30. So if you're talking about the 12 o'clock candle, right? If you talk about the 12 o'clock candle right there, this is, yeah.
Hey, Tim.
What's up?
Yeah, I'm talking about I think the 12 o'clock candle.
This one right here. This, now, I ain't gonna hold you. This candle right here, this is what I was talking about. I wouldn't have been able to take this drawdown right here. This candle right here, I would not have tried to buy that candle. I would not have tried. That candle would have scared the dookie out of me. This candle right here, over here at 11 o'clock, I would take that because it's coming back here to the fair value gap, right? But this candle off the 15-minute time frame, I wouldn't have messed with this. On a lower time frame, it may be a different story, right? Because looking at the 15-minute, right, this right here, I wouldn't have been buying on there. I wouldn't have been buying until over here at this candle right here. And the reason why is because this candle right here would have scared the dookie out of me, because we came down, right? We came down and barely poked below the sell side over here at 9:15, and then we went back up and we stopped at a SIBI, and then we dropped back down with authority like that. this drop back down there, I wouldn't have been trying to buy that. I wouldn't have been trying to buy that because I would have been like, hey, we just hit this SIBI and rejected down, and we came and took out this sell side and we closed way down here. Right. I wouldn't have been looking at it in the form of this is my opportunity to buy based off this 15-minute chart. Right. This 15-minute chart is not giving me that. This 15-minute chart, this candle is saying I want to come get this right here. Right. Because if we hadn't gone up and hit this SIBI, right, and then we came down there like that off this 15-minute chart, I still would have been waiting to see what we did with this low right here. That's why I said I wouldn't have been buying to over here because I play it safe. I want the algo to show me what it wants to do. I don't try to guess. So coming down here and being this close to this low, this rejection here is what I need to give me the confidence to come back in and buy over here at this imbalance right there. So that is a breaking market structure. I wouldn't have been trying to buy that. I would have been buying here. I would have been letting that go to see what the market was going to do. Did I confuse you? Are you frozen? You look frozen. I think she frozen, y'all. Let it go. Let it go. Elsa, can you hear me? Let it go. Let it go. Hopefully you heard that. Your repetition of this will imprint it in my subconscious for sure. Hey, man. That's what I'm here for. Where did it go? Consolidate, expand, retrace, deliver. Consolidate, expand, reverse, retrace, deliver. There you go. There you go. Hopefully, you heard what I said, Michelle. Hey, hopefully this helps somebody. If it didn't help, I'll try again the next time. I'll try to share something that gave me an aha moment. I try to do that whenever I get on Al Gore's internet and I speak to y'all. Michelle, if you're back, feel free to pull up before I close it out. If you didn't hear what I said or if you still got a question. But as we wait for that, please, my power went out, so I had to rejoin. I watched the last couple minutes back. Thank you. It's storming it. Oh, be careful now. My grandma said you can't watch TV and stuff like that when it's storm. You better get off. Al Gore's internet. Hey, be safe, Michelle, and everybody else that's in the loo. Give me 2 per. Hey, man, do me a favor. Take advantage of the day while you can to let your loved ones know that you love them, man. Don't just say it. Don't just show it. Say it, show it, and confirm it. Speak in the love language that they need to receive the love that you're trying to give. Open up the lines of communication so they can reciprocate love to you in the way that you need to hear it. Take advantage. Don't put it off till tomorrow. Call your grown kids. Go in the other room and hug your young kids, your young adults, your teenagers, your toddlers, whatever you have, your furry little pets, whatever you have. Take advantage of the day. Call your parents. If you're still blessed enough for your parents to be here with us, call your parents. Take advantage, man. Let your loved ones know that you love them. Ain't nobody promised tomorrow. Stuff happens every single day. Ain't nobody promised tomorrow. Take advantage, man. Take advantage. Take advantage. With that being said, until the next time that the spirit leads me to join you all on Al Gore's internet, I will see you on the next one. Big Spider gone, man. Yeah.